Hey guys, Happy New Year and welcome back to the first installment of my Vanguard portfolio update series of 2022. In this video, I'm going to walk you through my actual investments and the returns that I've seen throughout 2021 as well as my plans for 2022. So this is part of an ongoing series of videos to show you how an actual investment portfolio progresses over time. If you don't know me, my name is Brian and I'm the creator of Frugal Spender. On this channel, I talk about all things personal finance and practical ways to improve your financial situation. I am not a financial advisor, which gives me the freedom to be open and honest about my experiences and what I know has worked for me. So I believe in being completely transparent and open with all my content, warts and all, because I think it's important for people in the UK to have an open conversation about money and how we can improve our relationship with it. So one of my goals for this year is to be consistent with posting on YouTube. So I'm going to be releasing a video every single Friday going forward, with a minimum of one video a week. If you get any value from this video at all, please consider subscribing. I'm getting very close to YouTube monetization now, so the more of my content you watch and share with people you think are going to get some value from it, the quicker that will happen. So first things first, please do not blindly copy anything I do. Nothing in this video constitutes as advice, and if you need specific investment advice or any financial advice, you need to seek help from a financial professional. With that being said, I have just started to offer money coaching, which I look at as having a personal trainer for your finances. Money coaching differs from financial advice because it's more general financial help and focuses not only on the practical help that you can be given, but also on your mindset and goals around money. I absolutely love helping people improve their relationship with money because I've personally gone through debt, got out of it, and now started to invest, despite the fact that I was an absolute useless mess with my finances before. And as a result, I feel like I'm really in a unique position of having experience that I think people might benefit from. If you feel like this is something that would be of value to yourself, then head over to my website at frugalspender.co.uk and fill out the form to contact me. Okay, so to recap my last Vanguard update from November, my figures looked a little bit like this. I had a total in my portfolio of £11,236.34. That was broken down into £6,638.39 in my SIP and £4,597.96 in my stocks and shares ISA. The portfolio was up 33.44% and was driven mainly by the index fund that I invested from in the beginning, which was the Vanguard Life Strategy 100 fund. There's a little bit of an uplift from the S&P 500 within my ISA, which I started investing in back in October. Now the reason I started putting money into a separate fund is because my partner and I want to build up the biggest possible deposit we can to either put money down on a buy-to-let property or for when we upgrade to a bigger house. The returns I was getting at the point in November reached 12% for the S&P 500, which is not bad at all. So I hit the 10k invested mark in October, and that milestone seems to be getting further away in the rearview mirror. But I know I have a long way to go to get that compound interest ball rolling. So this year, I really want to focus on growing my ISA as big as I possibly can because it gives me the flexibility of access and tax-free money. The fact that I won't be able to access my pensions until I'm at least 55 means I'd have more time to add into it and get my tax relief. The way I'll be paying into my SIP as of next month is also going to change because it's not going to be from my personal account anymore. So my partner and I have set up a limited company where we're both directors, and this was after I left my previous job in the public sector. But as a result of being a director of a company, I can make payments directly from the business account into my SIP, giving the company a lower tax bill, but also allowing my money to grow more in a tax efficient way. This is a huge subject and one for a future video where I'll go deeper into it, but essentially what it means for me is that I'm going to end up paying less tax, which is a good thing because I can up my contributions. And please, please, please remember, when you get more money come your way, be intentional and don't let lifestyle creep sneak up on you. Okay, let's take a look at January's Vanguard numbers. Okay, so here we are on the Vanguard website on the phone. It doesn't go into as much depth as, let's say, a laptop or desktop would, but there's plenty enough to see the figures that you need to. So Vanguard don't currently have an app, which I think they are working on. And truthfully, it's probably a good thing that there isn't actually an app for it, because it means that you're not going to be glued to your investments, checking it day in and day out. Okay, so let's take a look at the portfolio. Go to My Accounts and Overview. So as you can see there, the portfolio value as of today is £12,192.66. So if we take a look at the pension first, you'll see there that's £6,779.92. And as we can see that the personal return that we've got for that is 27.10% and a total gain of £1,151.67. No surprises whatsoever with where I'm investing the money, still in the Life Strategy 100 fund, and that's going to be the one that I, for the foreseeable future, will continue to invest in. So if you look down at the contributions in this tax year, so far I've put in £1,020 myself and taken advantage of £255 worth of tax relief that the government gives me for putting money into my pension to prevent me from relying on the state pension. So there's another video which I'll link to above that goes a little bit deeper into this. So like I said earlier, where I'm going to be putting money from the company rather than personal, you'll see on that little list there of personal and company, the personal should stop unless I get a windfall and I want to put more money into my pension. But for the foreseeable future, I'm just going to continue to go through the company. So you'll see probably as of the next update, that line should start increasing, hopefully. And if we scroll down to manage your pension, so I'm not going to sell any of my investments, but if you were going to, this is where you would do it. And the reason why I've done it is just to show you how many current units that I hold with the Life Strategy 100 fund. So 22.5518 units with the value there of what's within the pension anyway. Okay, so let's go back and take a look at the ISA. So with the ISA, the current value is £5,412.74 with a personal return of 22.22% and a total gain within the account of £384.80. Now if we open up the ISA here and we scroll down, you can see I've got available cash, and the reason for this is because when you buy the S&P 500 you can't buy fractions of the unit, you can only buy it, which as it stands now is £67.50. So any available cash from the direct debit that I put into the account of £250 a month, which is what I'm currently putting in to the S&P 500, anything that's left over after all the units they buy will be left in cash. And then what I'll do is I keep an eye on that, and every time it reaches to the point where I can buy another unit of the S&P 500, I will do. And as we scroll down, and I really like this reminder every time I go onto the website or on my phone, I can see that I transferred my ISA, which was the first ISA I ever opened, stocks and shares ISA anyway, with Moneybox, was transferred on the July the 15th, 2020. And that for me was a milestone. That was the point where I was investing pounds and pence into Moneybox, which was literally save the change, like your app probably does with your bank. Any money that I had spent on a coffee that was remaining was invested, and the fees were astronomical in comparison to what I was actually investing, which I think when I transferred that over was about £60. So obviously not a lot of money, but it's a bit nostalgic when I look at it and I think, not that I've got tons of money in my account whatsoever, but it's a far cry from when I first started, and it just shows that you get used to investing more and more money the more you do it. It's like any other habit. You need to keep doing it to just get used to it, because when I first started investing, it was really panicky. I felt like I was going to lose all my money. I didn't know what I was doing, but realistically, the more you do it, the more comfortable you get doing it, and the chance of you succeeding in building wealth in the future increases drastically. Okay, so let's have a look at the personal rate of return, or the performance of my ISA. So as you can see there, it's a nice looking graph. That is skewed massively by me cost averaging every single month, just putting money into the account. So that's not all growth from the original stock that I bought. But what it does show you is that it's all going in the right direction. And when you zoom in there, you can see there's ups, there's downs. It's a little step. Sometimes it increases, sometimes it decreases. But as long as you continue to put money in, you're building that snowball in the right direction to just build up as much money as you can. Any returns, reinvest. dividends, reinvest, just keep going up and up the curve. So if we zoom out, you can see there, right down the bottom, there you go, there's the original amount, 87.96, 23rd of July, and that was the money that I transferred over from Moneybox. And then you can click anywhere in between and see what the value of your account was at that given moment in time. If we take a look at the investments and go to holdings, just like within my pension, I'm investing within the Life Strategy 100 and the S&P 500 too. So you can see the value of the S&P 500 is at 901, with heavily weighted towards the Life Strategy 100 fund. I'm just going to continue to use both of these funds as my main funds that I invest in. The bulk of my money goes into these index funds. We'll always do that. Yes, I like to experiment with Bitcoin or maybe a couple of single stocks, but it's always going to be a small percentage of what I invest. And then if we have a look at insights, and I know I've gone through this before, but it's quite good to see the reasons why I invest in this particular fund. It's heavily weighted towards the USA at 40%, with a lot in the UK as well. And a lot of people have said to me before, have you considered going into a different fund, because the UK economy only accounts for a small amount, smaller than 19%. But I think this diversifies my money really, really well. There's a heavy weight towards the USA, which obviously has the majority of the big companies that you want to get some of those profits from. But then also, the UK is always going to grow. It's a dominant force in the world. And then you can drop down and see the top 10 investments within the Life Strategy 100. And in there is the S&P 500. So I'm getting exposure directly to the S&P 500 by investing in it, but then also in that account, any benefits from the S&P 500 doing well also improves the Life Strategy 100 fund too. And then you can go down even further, have a look at the sectors. Most of it's in IT and then financials, but there's good diversification there across the world and across industries. Thank you so much for getting this far. It really does mean a lot to me. Please remember to leave a comment below to let everybody else know where you are in your investment journey. If this is the first time you've ever seen a video on investing money, I hope it's given you some inspiration, even if it's just a little bit, to consider putting your money to better use and creating a plan for your future. Do remember though, before you move on to the next video, please hit the like button and subscribe to my channel to be notified whenever I release a future video.